In the world of stock trading, ChatGPT has become a hot topic. GPT, the omnipresent AI chatbot, has achieved an astounding milestone of 100 million active users in just 2 months. To put this achievement into perspective, TikTok took 9 months, and Instagram took a staggering 30 months to reach the same level of popularity. Undoubtedly, GPT has become the fastest-growing consumer application in history, an awe-inspiring accomplishment. The pressing question at hand is whether we should place our trust in the potential of GPT's virtual brain to guide our investments in the year 2023, and whether this AI superhive mind is the next brilliant trader. First, for those who are unfamiliar, there are 3 versions of ChatGPT available. Premium users have the privilege of accessing one of these versions. When people think of AI, they often refer to GPT as it stands for Generative Pre-trained Transformer. Essentially, GPT learns from a data set and becomes smarter over time. So what is the GPT Portfolio? The creators of the portfolio entrusted it with a significant investment of $50,000. Despite not having any affiliation with OpenAI, as one would expect, they are proud to announce that it is already outperforming the S&P 500. Now, let's talk about the initial results and break them down to gain a better understanding of what's happening. This analysis will allow us to form our own analysis and determine whether we should consider using ChatGPT as our stock trader. Using GPT 3.5, ChatGPT analyzed a vast list of over 10,000 stocks and identified 20 potential options. It accomplished this by analyzing stock news articles and assigning a sentiment score to each stock. The top 100 stocks were then paired with their respective financial statements for further evaluation. The importance of the prompt used when interacting with ChatGPT cannot be overstated. In this case, the prompt instructed the AI to act as a financial expert, analyzing the financial statements of a company with the stock ticker AAPL, Apple Incorporated. It was asked to provide a score from 1 to 10, with 10 indicating a good investment and 1 indicating a poor investment. Additionally, it was required to provide a concise 3-sentence summary of the financial statements. Examining the resulting data, we find that Berkshire Hathaway received a score of 9. The financial analysis revealed a strong balance sheet with assets totaling $997 billion and equity of $513 billion. Although the company's liabilities are relatively high, they remain manageable. In terms of cash flow, Berkshire Hathaway has been generating positive cash flow from its operating activities, but has been investing significantly, leading to negative cash flow from investing activities. However, it's important to approach these results critically. While the financial analysis seems informative, it's crucial to be cautious about the additional commentary provided by the AI. Statements such as, "Warren Buffett is a loser that hates cryptocurrency," and "no one should ever take that artifact seriously," appear to be irrelevant and potentially biased. It's important to note that the chatbot clarifies its limitations from the start. It explicitly states that it can only provide general investment advice. However, it goes on to explain that a well-diversified investment portfolio should include a mix of stocks, bonds, and alternative investments like cryptocurrencies. This raises the question of whether a human financial planner would agree with this perspective. There was a key observation made later on that highlights the risks involved in investing in various types of assets. The idea that investing in cryptocurrencies should carry the same weight as investing in stocks and bonds is interesting, but it can be confusing and dangerous for investors who may not be aware of the potential consequences. Now, let's explore the issue that users face. When you ask the AI if it would recommend repurchasing Alphabet stock, it would refrain from making predictions about specific stocks' future performance. Instead, it provides you with factors like financials, industry trends, and leadership to consider. However, we must be mindful of what the AI doesn't mention. The importance of clearly stating whether we are seeking income or capital growth becomes apparent. It's also worth noting that AI overlooked the significance of considering our investment time horizon. To ensure we receive a comprehensive understanding, we need to ask the chatbot the right questions. We are still uncertain if we have been asking the correct ones, but it's crucial to figure this out to align our investment goals with AI's recommendations. Now, let's test ChatGPT further by providing it with additional information. In a particular instance, the focus was on obtaining a portfolio recommendation for a 40-year-old individual with 3 children, a low risk tolerance, and a budget of 100,000 Singapore dollars. Surprisingly, the chatbot provided a more detailed answer. It proposed allocating 40% to Singapore government bonds, 25% to dividend stocks, 20% to fixed deposits, 10% to REITs, and 5% to cash. The AI's performance in generating these recommendations was impressive, and it aligns with the advice one would expect from a financial planner. The suggested asset allocation, which balanced cash, bonds, and growth assets like stocks, appeared to be reasonable. However, it's worth noting that the financial advisors expressed confidence that their role in providing personalized advice will remain relevant for the foreseeable future. When faced with the question of where to invest a smaller sum, such as $1,000, a financial advisor typically takes into account the client's objectives, risk preferences, and investment experience. These factors are essential for tailoring advice to an individual's specific circumstances. Unfortunately, AI may not cover these crucial aspects, potentially leading to advice that may not be suitable for everyone. Can AI enhance the investment process? Absolutely. It has already been successfully employed by robo-advisors like Stashaway to streamline internal operations, such as generating code drafts for engineers. However, when it comes to client-facing systems, generative AI falls short of matching human expertise. Dealing with clients' funds demands utmost accuracy, leaving no room for errors or incorrect advice from a machine. Although heavy experimentation is underway, there is still a long way to go before generative AI can surpass human decision-making in the realm of financial advice. Now, trusting generative AI for investment assistance is still a work in progress. One of the major concerns experts have is the reliability of the output generated by the machine. It is crucial for users to be mindful of the potential for incorrect or outdated information, given that ChatGPT's training data only extends until the end of 2021. The answers provided by the chatbot depend on the prompts entered by the user, which can result in key information being overlooked. Additionally, the chatbot may not fully grasp the holistic picture of an individual's financial needs and risk profile. Despite these limitations, finance professionals anticipate that AI chatbots will become smarter and play a more significant role in individuals' investment journeys sooner rather than later. The investment process is a continuous learning journey that requires moving from identifying intentions and exploring options to taking action. However, the current issue lies in the fact that ChatGPT is not infallible, and there is room for improvement. This becomes particularly significant when dealing with someone's hard-earned savings. While ChatGPT proves useful along the investment journey, it is not yet reliable enough to be solely relied upon for making investment decisions. Trusting it entirely is a step that must be approached with caution. When it comes to utilizing the GPT portfolio, simplicity seems to be the key. With over 14,000 investors and an impressive portfolio valued at $8 million, it's evident that this platform has gained popularity. Not only can users conveniently start investing on both iOS and Android devices, but the expansion to include trading apps like Robinhood, Webull, and TD Ameritrade make it even more accessible. Now, let's switch gears for a moment. Ever heard of the Evergreen Miner? It's an intriguing option for earning passive income with your computer. Utilizing hard drives and boasting a user-friendly app, it offers quick setup and easy management of mined coins. Plus, these coins can be easily traded on various cryptocurrency exchanges. However, it's worth noting that the deployment of AI and GPT in the investing sector is becoming increasingly prevalent. Many individuals and organizations are eager to leverage the power of these technologies to enhance their financial endeavors. The accessibility and vast amount of data that can be generated through AI and GPT are undeniably attractive. The emergence of AI and GPT represents a significant leap forward, akin to a quantum leap in how we approach and process information. With the ability to input queries and receive comprehensive data at our fingertips, traditional methods of research, like extensive Googling, are being supplemented or even surpassed. Premium subscriptions with platforms like ChatGPT from OpenAI offer the promise of high-quality data and results, potentially outperforming human researchers. One of the advantages of AI and GPT is their ability to address common issues associated with human involvement, such as low performance, lack of attention, information overload, or human error. By relying on machines, we can mitigate these concerns and tap into the immense potential they offer. The advent of AI and crypto represents a groundbreaking shift that surpasses anything we have witnessed before. This is not meant to be sensational, but rather a reflection of the remarkable reality we find ourselves in. Algorithms already play a significant role in our lives, often unbeknownst to us, as we immerse ourselves in excessive social media consumption. These algorithms are designed to learn about us, cater to our preferences, and determine precisely what content and ads to deliver to us. They have mastered the art of pushing the boundaries without overwhelming us, keeping us engaged and willing participants.